What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to take a look at why the recent crypto dip is likely over and why we're about to see an explosive rally over the next couple of weeks. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So with that being said, guys, I want to jump straight into the charts here, starting with the total crypto market cap on the weekly. Of course, this is basically the combined market cap of all cryptos. And as you guys can see, and as some of you might remember, this recent pattern that we saw here looks almost identical to the pattern that we saw just before the final blow-off top back in late 2021. Specifically, we saw this drawdown in the second half of September. Then we saw this kind of bullish engulfing candle at the very end of September, and then a massive melt up into the basically into the end of 2021. And we're starting to see the same thing here, where we have this bullish engulfing, potentially foreshadowing a melt up over the summer. And it makes things a little bit clearer on the daily, and also worth zooming in actually to point something out, is that it's possible, I guess keyword possible, that we could still see another kind of like leg lower, maybe in the next week or two, like really all the way down, like moving down to this support level, same like how we saw back in 2021. We could see the same thing happening here with the total crypto market cap, again retesting this level around 3 trillion. But the thing is that if you zoom in here, guys, you can see that we actually did tag that level. We tagged that 3 trillion level, we bounced from it, seemed to be rallying back up again. So I think on balance of probabilities, I would say there's like a 70% chance that we just see crypto continue to rally versus a 30% chance that it gets another kind of like, one more leg lower to kind of spook the traders out before moving higher. I think that we're kind of entering this phase where the risks are to the upside, as I've been saying probably for a while now, but this time is for real. But in all seriousness, guys, I want to zoom in now to Bitcoin. We're looking at Bitcoin here on the weekly. This is where things are really interesting. Again, we have that bullish engulfing pattern just before the final blow off top. Similar thing happening here. But of course, the difference is that Bitcoin is now pressing up against this long-term resistance trend line that has been basically forming for the last 8 years. And you might think, okay, well, why is this important? Like, what does this mean? Well, if we look at the silver chart from the 1970s, 1980s, we can see almost the exact same thing here. Of course, in silver's case, it was basically 3 6-year cycles, and then here we're seeing 3 4-year cycles. And then in that final kind of, let's say, third cycle, once it got above that long-term resistance trend line, in silver's case, it just went parabolic. And we're on the weekly here, by the way, guys. This is not the monthly, this is weekly. Over a matter of weeks, you see a parabolic move, and you might say, okay, but how could this happen with Bitcoin? And the short answer is because the supply dynamics are really similar. In the 1970s, 1980s, there were 3 billionaires that basically bought up roughly around a third of silver's tradable supply, and we're seeing the exact same thing with Bitcoin, with these Bitcoin treasury companies and all these basically institutions. They are also buying up roughly, if you actually math it out, it actually is also roughly a third of Bitcoin's freely tradable supply. A lot of people forget that around a third of Bitcoin is lost, so the amount of Bitcoin that's actually freely tradable is not very big, and a lot of that again is being hoovered up by these basically by these treasury companies. So it does set the stage for a supply squeeze or supply shortage or whatever term you want to use. It sets the stage for something exactly the same for Bitcoin, as like basically identical to what we saw with silver in the 1970s, 1980s. And again, over the course of literally like 2 or 3 months, you saw silver's price go absolutely parabolic. And I think we could see the same thing here happen with Bitcoin. Of course, by this stage, you're probably thinking, okay, but what about altcoins? What about altcoins? This is a chart that you need to burn into your brain. This is, I think, the most important chart when it comes to altcoins, and that's the DXY, or the US dollar index. Why is it important, and why have I circled these areas here? In short, guys, as you might have noticed, that when the DXY goes down, that tends to correspond to a crypto bull market. And when we get that second leg lower in the DXY, that's when altcoins rally the hardest. And you can see back in 2017, DXY was going down, crypto was rallying, and then we got that second leg lower towards the end of 2017, and that's what triggered the altcoin season. Same thing in 2020, we saw basically the DXY rolling lower and lower and lower, and then basically going into late 2020, early 2021, we saw that second leg lower, and we saw altcoins rally like crazy. And now we're seeing the same thing. 2025, well, I mean, 2025 has been an interesting year, let's say, to put it lightly, but you've seen basically the DXY falling. Now we're getting the second leg lower that is literally starting, as of last week. We can see there was a really nasty weekly close here. Basically, it looks like the bear flag is forming, a bearish engulfing, whatever you want to call it. There's many different, analyses you can do on this price action. But the point is that you can see that it looks like the DXY is just completely rolling over, like the bottom's falling out, and it's going to see another leg lower down to, I don't know, 94, 95. I'm not a Forex trader, so, take this with a grain of salt. All I know is that we're seeing a second leg lower here, and historically, that second leg lower corresponds corresponds to a massive rally in altcoins. And we can actually see that we're on the brink of that on the others chart. Of course, for those of you who don't know, the others measures the market cap of all the cryptos outside of the top 10. So it's a good proxy for altcoins. And apologies, it's a little bit messy here. We have the Bollinger Bands enabled, which is my favorite indicator. And you can see that the total crypto market cap is now above the Bollinger Band moving average on the daily. And what's really interesting is that this seems to correspond to a long-term resistance trend line that altcoins have had a hard time rallying above. And it looks like they're on the brink of doing that. So if altcoins go up, I don't know, another 10%, 20%, we will potentially get a break, or basically a confirmation of a break above this resistance trend line. And the reason why I have the Bollinger Bands on is that you could make the argument that we've already seen confirmation of that break, at least according to my indicators. But again, with this long-term resistance trend line, maybe it needs to go a little bit higher. The point is that, especially with the falling DXY, the chances of altcoins, again, like rallying above this resistance trend line and then rallying up to this long-term resistance trend line here, we can see we're on the daily, by the way. You can see that altcoins have basically been chopping in a range here since, well, basically for almost the last 2 years, a year and a half roughly. And you can see that, you know, every single time we get up to this upper level, everyone gets bullish. When we get down to this lower level, everyone gets bearish. And we've kind of been bouncing between these two levels. We were recently, again, retesting these lower levels. Everyone is feeling super bearish. And I do think that we're going to see a break above this these resistance levels and then rallying back up to this long-term resistance and then rallying above that and continuing to head higher. And of course, that begs the question of what's quote unquote different this time is that, you know, going into this final phase of the cycle, altcoins are pretty beaten down compared to what we've seen in previous cycles. And I personally believe that's because in early 2024, I think a lot of existing retail investors aped into altcoins after the spot Bitcoin ETFs were approved. They were expecting new retail investors to arrive in late 2024, especially with Trump's election. That never happened. And the result is that basically or not all, but most existing retail investors have either sold all their altcoins or reduced their altcoin positions. And you've basically seen a slow grind down in altcoins as a result over the last year and a half, right? Because basically all these existing retail investors from the previous cycle, they bought all their altcoins really aggressively in early 2024, and they basically got impatient waiting for new retail investors to arrive when, historically speaking, again, that altcoin cycle doesn't happen until the very end, even per the DXY. And even if you just go and look back, you'll see that the altcoins rally the hardest in the final phase of the cycle, which again looks like it's about to start. It's right ahead of us, potentially here over the summer. And the kind of silver lining there is that because most existing retail investors have sold, it turns them into net buyers rather than net sellers. So they're basically going to see existing retail investors aping back into the altcoins that they sold, and then also new retail investors coming in. And as a fun fact, the number of new retail investors could actually increase. Well, the number of retail investors in general could increase by roughly 3x to match that of stocks. So this narrative that retail investors are all here, it's like all this stuff is objectively false. And I've dispelled it in previous videos. Maybe I'll have to do another video like dispelling all these myths again, because I'm sure I'll have a couple comments. But anyways, the last thing I'll say here about others is that if you want to get a sense also where others is going to go, all you have to do is look at Ethereum, Solana, and SUI. That's because most altcoins with economic value exist as tokens on Ethereum, on Solana, and arguably also on SUI. So if we know what ETH, Sol, and SUI are going to do, then it gives us a pretty good sense of what the rest of the altcoin market is going to do. So of course, going here to the Ethereum chart on the daily, have my Bollinger Bands, my favorite indicator. You can see that Ethereum is back above the Bollinger Band moving average on the daily, but of course it's been chopping here for the last basically, you know, like a month and a half, which again, in my view, just as a quick side note, you know, a lot of people are saying, oh, like crypto prices are just going to keep chopping over the summer and they're only going to rally at, like at the end of the year. But they seem to forget that like most, or not most, but many altcoins have especially major altcoins have basically just been chopping for the last month and a half already. So you're telling me they're going to chop for another like multiple months? No, I think we're nearing the end of this chop phase and we're nearing the beginning of kind of like the, let's say the up phase. But in all seriousness, you can see that Ethereum retested the Bollinger Band moving average here on the weekly, confirming that was basically support. And now we're probably going to see Ethereum rallying higher in the coming weeks. Same thing with Solana. It's actually looking even better. It saw a bullish engulfing here last week, same like with Bitcoin. And we can even look on the, and that's on the weekly, by the way. And then looking here on the daily, we can see Solana is above the Bollinger Band moving average on the daily. Looks like it's about to squeeze. Could potentially see a rally higher with that spot Solana ETF kind of hype that's been going on. Potentially, for those of you who missed the memo, it looks like we could see a stake spot Solana ETF approved in the coming days. Who knows? In Ethereum's case, we have ETHCC happening later this week, which could be a huge catalyst for Ethereum as well. And then for SUI, it's looking a little bit weaker, but still not too bad. It's here struggling with the Bollinger Band moving average on the weekly. Also happens to be the Bollinger Band moving average on the daily. But we can see that SUI seems to have seen a little bit of a bottoming pattern here and is now in the process of reversing. And I do think that we will also see that in the coming weeks. So yeah, like again, I guess to summarize, everything is looking pretty awesome here. The total crypto market cap, again, especially when we switch to the weekly, we can see that this pattern is just identical to what we saw before the final melt up back in 2021. The thing that's quote unquote different this time is that it looks like we could see a very, very big melt up, especially from Bitcoin. If it does break above this 110, 111,000 level, that'll probably result in a supply squeeze, short squeeze driven massive parabolic rally, not over the next few, well, I mean, over the next few months. But again, this is not something that's going to take years to play out. It's literally going to happen over the course of multiple weeks if it does happen. And I do think there's a high chance of it happening. Then for altcoins, we can see the DXY is literally rolling over, having that second leg lower, which historically has corresponded to a massive altcoin season. And of course, with the most existing retail investors being offsides, then we're going to have basically most existing retail buying back into their positions plus new retail arriving. I think that's going to correspond to an explosive altcoin season, which we're seeing kind of confirmed here by the others chart. Once we see a break above this resistance trend line, then chances are that we're going to see a pretty sizable rally. This resistance, this long-term resistance here around 364 billion, that could end up just being a pit stop. Maybe it'll just do a little bit like, like a week or two of chop around that level, and then it'll just continue powering higher, kind of similar to what we saw back here in November of 2024. Of course, we can get confirmation here from Ethereum, Solana, and SUI that they're all three of these cryptos are looking pretty good here on the daily, supportive of the idea that altcoins as a whole are going to rally. And again, the main thing I would say though is really the DXY. Like this is the main, most important flashing indicator in 2017. And this is something, yeah, I'm sure I'll get a couple comments. In 2017, interest rates were rising, and in 2017, the Fed was doing QT. So this whole idea that we need QT or we need the Fed to cut rates for altcoins to rally, it's just false. Like we only have one kind of reference point, which is 2021. The fact that we have a counter to that in 2017 suggests that that's not necessary. But one thing that is necessary, as far as I can tell on the macro front, is that we need the DXY to be falling, and that's exactly what's happening now. And when that second leg lower comes, that's when altcoins rally, and that is literally starting right now. Anyways, so yeah, like again, Ethereum looking pretty good, Solana looking awesome, SUI struggling a little bit, but looking pretty good, all things considered. And taken together, I just think it looks like we're going to see a very sizable rally in Bitcoin and altcoins over the next few weeks. So yeah, guys, if you did find that information helpful, then be sure to help us out as well by checking out the Coin Bureau deals page. In case you didn't notice, we were using Binance there. We have a 20% trading fee discount and up to $600 of bonuses. Taking advantage of these deals is super simple. Just click that sign up now button in the description or in the comments. It'll take you to a page that looks like this. It takes 2 seconds to sign up. If you can't use Binance for whatever reason, then do check out our other exchange deals like Arkham, which is available to US users. And we also have other exchanges here that are available to users in jurisdictions that might have trouble accessing Binance for whatever reason. And when you guys use these deals, we get a cut of your trading fees. You get a trading fee discount, and the exchange gets a new user. So it's a win-win-win for everyone, especially during bull markets. So take advantage of these deals while they're still around to help us out, help yourself out, help out our partners. And if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping the notification bell, and I'll see you in the next one.